Factor for people owing money when they file their tax return is that during the course of the tax year, at some point or more than one point, they withdrew money out of their retirement program, whether it's a 401k, 403b, IRA, whatever the case may be, and they're under 59 and a half and they took that money out prematurely. We always recommend to clients it's never a good idea to take money out of the 401k. I know that there's some circumstances that people can't help it, people have bills to pay. But in most cases, we really tell people it's not a good idea. And the reason is you end up owing a lot of money because not only is it fully taxable, there's also a 10% penalty. So the first thing we tell them is, go into your payroll, go into your bank, go into your union hall, and see if there's a way to take a loan against the 401k. In most cases, there is. If you take a loan out and you pay it back weekly, bi-weekly through your paycheck, and typically it's 5 years, if you're able to pay that loan back, you don't end up having to pay taxes on it because the money you're taking out, you're essentially putting it back in. So that's the first thing we say. Can you take a loan out? But the reason why we recommend against it so much is because the amount of taxes you owe on it. So we'll take somebody, let's say they live in one of the 5 boroughs in New York City, and we'll say they're in a 25% federal tax bracket, and they come in and they have taken out $50,000 out of their 401k. Unfortunately, they're going to owe a lot of tax and penalties on this. So just off the bat, typically what you're going to owe is 25% to the federal, you're going to owe 7% to New York State, you're going to owe around 3% to New York City, and there's a 10% penalty. So you're looking at a 45% payment in taxes on what you would owe on that $50,000. And basically you have to pay half of what you took out back. So that's why we really never recommend people taking money out of their 401k.